Tell me something about yourself.
Hello, Gancham. My name is Saurabh Bagmare. I'm from Mumbai, Maharashtra. I stay in a nuclear setup with my parents. My father is a retired government servant. He was working in Bombay Port Trust as a clerk. My mother is currently working in Bank of Baroda as a clerk. Coming to my academic qualifications, I'm a qualified chartered accountant. I have completed my 10th and 12th from Maharashtra State Board. Thereafter, I completed my graduation from Mumbai University. Post graduation, I started my CA journey. Uh, I completed my articleship from OSSP and Associates, which is a mid-sized firm based in Mumbai. During my articleship, I have worked extensively on softwares like CA Office, Tally, TDS, RPU, and Excel. I have also prepared books of accounts, filed GST returns and income tax returns. I was also involved in tax audit, stat audit, and GST audit. I have also represented myself on behalf of my clients on various complex matters with income tax department and GST department. Post completion of my CA, I joined Grant Thornton, which is a Big Six audit firm. I joined Grant Thornton in stat audit domain. I have worked in Grant Thornton for around 8 months. Over there, I was involved in audits for clients like ATOS India, WNS, E-Emphasis, and E-Solutions. I have not extensively worked on clients like ATOS India and WNS, but for E-Emphasis and E-Solutions, right from the planning stage to archival stage, I was involved. My hobbies are driving, playing football, watching football, playing games on PlayStation. That's it. आवाज नहीं आ रहा है आपका?
You also worked in Accenture, I guess.
Yeah. And now I'm currently working with Accenture.
Okay. So what work out there you're doing in Accenture?
Right now they have allotted me to do pre-close, and pre-close is basically we have to like for every GL I have to compare variance of previous month and current month, and I have to write comments. And I'm doing reconciliation also. There is a blackline reconciliation tool where basically like in that reconciliation tool you have to post like every like entry or for a particular GL what why is the difference, and then you have to provide a narration that why is there is a difference and provide some working and attach invoice, and it's basically just you are making a double entry. So far and so forth, I've been working on that only in Accenture. It's just been 2 months.
Okay, why you want to join ONGC?
I want to join ONGC because it is a Maharatna PSU, first of all. So, do you want me to explain what is a Maharatna PSU?
So I wanted to know ki you are in Grand Total for 8 months, then it's not too long in Accenture. Why you want to join ONGC?
Yeah,
What is the reason behind it?
yeah. Okay, that way I wanted my first objective post completion of CA was to get a government job. So when I joined in ICI campus, I was selected only by audit firms, and my first priority was to get a government job. Then was to work in an FP&A role, and that's it. So those were my two priorities. But I got like into GT, which is an audit firm. So beggars can't be choosers basically. So I joined Grant Thornton. Then I simultaneously started applying for companies which provide me FP&A roles. So I got selected in 2, 3 companies as well, Willis Tower Watson, Capgemini, then I guess Morgan Stanley and Edelweiss also. But they were not paying me uh, they were not providing me hike. So Accenture has provided me 30% hike, and it is also like close to my neighborhood, close to my house. That is why I've joined Accenture, and eventually I want to join a government PSU sector only.
But
So
why
why I
government
want to join
PSU?
ONGC?
Why PSU only?
Yeah, because it would provide me a lot of facilities. Like speaking about ONGC itself, it is providing you after 1 year of probation, it is providing you housing loan of 60 lakhs. Then it is providing you a lot of medical facilities as well. Then also it is like providing you vehicle loan, and there are a lot of perquisites attached to a government job, and there is also a stability in government job. Likewise, in Accenture, they are laying off 19,000 people across the globe, and in private sector, it is very uncertain that your job is not secured. Even if you are performing at your highest, basically they are laying off people who are working in the highest position. So eventually, if I grow in Accenture or any other company in private, my job is not secure. So I want that security in my life.
But the thing is that in the PSU, okay, the growth in terms of earning will not be that great, okay? So you might get a growth around 6 to 7%. Are you okay with it?
Yeah, I'm okay with it.
How will you cope up with the inflation?
Yeah,
How will you cope
I
up with the
will.
inflation?
I will start some side by side venture as I'm very interested in teaching. So once I get to hang of things like what is the work, how I'm supposed to work around here, and how much like extra time I'm getting after work, then I would start my own tuitions or something like that. But that
Will
is
that not
like for
impact
freelance.
our work? But that will impact our
What?
work also. In don't you think that if we
Yeah, I
do any side hustle, it will impact our work also here?
I'll look that first work is everything is completed, but whatever to be very honest, whatever ONGC is paying me, I'm very satisfied with that. I don't want to like earn like too much of money. But as a philanthropic activity, I want to teach a student, and also I'm looking like it's my dream to open a YouTube channel where every person could learn in free. So
Okay,
that is also one of my goals.
great. Okay, what do you know about our company ONGC, and what is the good part you like about ONGC, and what is the bad thing that you like about any PSC?
Bad thing I like. Okay, so what I know about ONGC, I know like a lot of stuff about ONGC. I have read ONGC's AGM of 2021. So, what would you like me to explain about ONGC? Like, I have read about its strategy, risk and concerns. Then I have read about basic, like who is the chairman. Then how does the oil industry works? Like how the PP is generated. I know all these things. How would you like me to start upon? Like, I know a
Start off,
few.
you want start up with something, then I will cross question if I think. Start up with your own way.
Okay.
Yeah.
Yeah. So, since we have a time constraint, I would like to talk about oil and gas assets. So, basically, how is PPE formed in oil and gas company? So, I would like to talk about that. First of all, there is EWIP, which is called as exploratory well in progress. Then there is DWIP, that is called developmental well in progress, and there is PP, which is your basically fixed asset, property, plant, and equipment, right? So in EWIP, what is that? It is an unproved reserve, and it is classified as an intangible asset. Okay, so any drilling activity which is performed in EWIP is not certified by any engineer. That it is not certain that oil is going to extracted from there. So it is an intangible asset, and whatever drilling cost, machinery cost, everything is straight away debited to P&L. That is the difference between EWIP and DWIP. So in DWIP, what happens? That is developmentary well in progress. It is classified as current work in progress. So it is basically an current asset. So any drilling activities performed in CWIP, then it gets if let's say if oil is found over there. So all the costs which are incurred for extracting that oil, that is transferred to PP account. And let's say suppose if oil is not found over there, then it is capitalized in DWIP itself. And also, I would like to tell you about how the crude oil price impacts your inventory, impairment testing, and inventory impairment testing, and yeah, in your transaction price. So basically, what happens? Let's say you're ONGC and I'm HPCL. Okay, so we have a contract. So government sets a price for everybody that you have to purchase. Let's say in 100 rupees. So if my cost is like increasing more than that, and I'm selling you at 100 rupees, then I would, depending on that price, I would change my transaction agreement. I would change my contract. Also, let's say that crude oil prices, like crude oil prices are set by government is very low. So I would try to hold my inventory. I would maintain a cost benefit analysis, right? So that I have to maintain a cost benefit analysis because I would not sell my crude oil at loss. And also for impairment testing, because impairment testing is done at the end of the year, like on 31st March. So that time we have to check the crude oil prices. What are the crude oil prices going on? And on that basis, they are going to do the impairment testing, like they are going to determine the recoverability of assets. And from audit point of view, we should also check how much exploratory cost has been debited to P&L, because that cost is straight away going to debit to P&L, and it is straight away going to impact my profit and loss account. So this is about basically about oil and gas companies, how PP is
What is
formed
the
and
share
how
price of
PP.
ONGC? What is the share price of ONGC?
158.95 right now.
Why
158.95.
the
I
share price
checked
is not
in the
increasing?
morning.
What is the why the share price is not increasing of ONGC in the last 10 years? Not
Maybe
growth.
that I don't know, but that much extensively. But there is an introduction of a tax called windfall tax. So, what is a windfall tax? I would like to explain you. Basically, let's say suppose you are purchasing oil from Russia. Okay, you are purchasing crude oil from Russia, and you are straight away exporting that crude oil to. Let's say you're exporting that crude oil to Pakistan. You're purchasing in 100 rupees and you're exporting to 150 rupees. So the government is telling you that you are like 50 rupees you are earning profit. So upon that profit, you have to pay some tax, which is called windfall tax. This windfall tax was introduced by government in July 2022, and now they have like they see in during that time in July 2022, ONGC's share price was also fallen down because of that. But now government has stopped that crude oil, that windfall tax on crude oil, but now it is imposing on diesel. So ONGC is only selling crude oil. ONGC is not refining crude oil and selling it. So that is not currently impacting right now. That is what I know, like why the prices have gone down in like recently,
What are the
like in six
different
to eight
products?
months.
What are the different products sold by ONGC, and what are the different business activities, revenue streams of ONGC, which you know?
I know about the different products like crude oil, natural gas, LPG. Then other they sell other value-added products as well. Then ethane, propane, and naphthalene. So these are
What are the
basically
revenue
five to
streams of
six
ONGC?
major.
How does it make money?
Yeah, it makes money by selling crude oil to downstream companies, crude oil and natural gas, and other those products which I have mentioned.
What is the major threat you think the business has in the long term?
The major threat the business has in the long term is like I could say that overall in the world transition is going right. So why this transition has happened? It is because of ongoing tensions in Eastern Europe, and then also because of recently all the countries have signed a Paris Agreement that they are going to switch over on renewable sources of energy. Because of that, overall in the globe, overall in the world, they are switching to renewable sources of energy. But in India, since India is a developing country, right? So we need energy right now more than ever. So at least in like next 3 decades, we are not going to switch over to no renewable source of energy. So basically, the threat is like it's not a threat, but it is a change. I could say that eventually every oil and gas company has to like diversify its portfolio and also should enter into like no, renewable sources of energy such as wind energy, solar energy, then uh, electric energy. So There is, as such, right now, there is no threat to ONGC, but it should diversify its portfolio in the long run.
Okay. Tell us about the what will be the implication of India's 116 and 115 on company like ONGC?
Okay, so India's 115 is basically revenue contract, right?
Right.
And India's 116 is leases. So, ONGC would be having like their colonies, their plants, all these on lease, right? On operating lease, on finance lease, basically. And in revenue recognition, they like, what is the hello?
Yes, yes.
Yeah. So what is the concept of revenue recognition? Revenue recognition in their 115 says that you should be prudent in recognizing your revenue. You should defer that revenue to maximum extent as possible. So let's say I don't know about how it is going to work in an oil and gas company, but I know what is the concept of why those five-step models were introduced. Let's say for an AC, you are purchasing an AC. So when you purchase an AC, you sell three components. Like you sell the AC, you provide for the servicing, and you provide for the warranty as well. So this India's 115 says that you are not like you are currently you are only selling the AC. You are not. You should not recognize the revenue you would be earning from servicing, and revenue you would be earning if you do not provide any warranty in case of any damage. So you have to defer that. That is why the five-step model came. So you want me to explain about the five-step model? What is the five-step
I
model?
wanted to know what is the definition of a transaction price as per India's 115?
So the definition of transaction price, as such, I don't know what is the definition of transaction price, but I would like to say a few things about transaction price is that in transaction price, you have to consider fixed consideration as well as variable consideration. Basically, whatever money you are receiving from your like buying part.
How do you calculate variable consideration?
I have no idea, sir.
No idea. Okay. 116, okay, RU assets, right of use
Yeah,
assets, how it
yeah,
will be accounted for in
yeah.
the case of ONGC?
Yeah, so basically, let's say ONGC is paying some lease payments. Like for 10 years, it is paying some lease payments around 1 lakh rupees for every 10 years. So you would accumulate those 1 lakh into 10, that is 10 lakh, and then you will calculate one PV factor and accumulate that PV factor and multiply those cash flows which you are going to pay. You have to multiply those cash flows with that PV factor, and then you would get the value of the ROU asset.
Can the working capital be negative? And if it is negative, it is a pros or a con?
Working capital, if it is negative, then you are not you are you don't have enough funds to carry out your business. If working capital is negative, that means you are not receiving more money, but you are paying a lot of money. So that is the situation with, if let's say if the working capital is negative, and obviously that's a con. And in case of ONGC, as far as I have seen their balance sheet for the previous year, working capital is negative.
Working capital is negative. Okay.
Yeah.
What are the major reasons why working capital can be negative? You're saying that it is con, okay? But in case of DMart or it's a good company like a DMart or any grocery companies, okay, where you also see that working capital can be negative.
Yeah,
And
basically, we could also say that we are paying late to our creditors. Maybe that is why working capital could also be negative.
you're getting
We
cash
are
from
deferring
customer
our
very
payments to
quickly.
creditors.
Like in the case of
Yeah,
grocery
but
shops or big bazaar, like big bazaar, or they get
yeah,
the
yeah,
customers paid directly to them. But to the creditors, they have to pay very late. It is a type of where
yeah.
it is
So
good for the company
that
also.
maybe that depends upon the aging schedule of that
Yes,
uh,
yes. That is
company to company. It might depend.
really different. Okay. What are the various expenses do you think the ONGC has to bear?
Hmm, I have no idea.
You know, I have no idea. You know
Like
about what are
billing
the pending
cost,
litigations? Pending litigations of ONGC?
yeah. So there, I know three litigations. So it was with Vedanta and KM. So in that, what happened was, since ONGC is a nominee of government, so ONGC says that I will there is a profit sharing ratio over there and expense sharing ratio as well, which was 33% between ONGC, Vedanta, and Kane. So ONGC was telling that before exploration cost, whatever expense has been incurred, for that I'm not liable. But post exploration cost, whatever expense is incurred, for that I'm liable. So that I'm going to pay, like we are going to share. But for pre-exploration cost, because this pre-exploration cost is strictly debited to PNL. So maybe because ONGC don't want to reduce their profits, so that is why, and this matter is in dispute, so on and so forth, and they have shown the disputed amount as a contingent liability. Also, one matter is pending with I guess Tamil Nadu government, which is so ONGC is carrying out its exploration activities in Tamil Nadu. So Tamil Nadu government is telling that while you are paying me rent, so you also include royalty in that. So basically, what is royalty? Royalty is a kind of a payment to government which ONGC makes when oil is extracted. So so as a part of a premium, so ONGC is paying that royalty to government. So, but this Tamil Nadu government is saying during the exploration phase only you pay me the royalty. So that is like illegitimate from the part of Tamil Nadu government. So and also we can't right now ONGC can't determine the royalty as well because oil is not been extracted from the place. So they have not shown anything as such, but they have mentioned this matter in the AGM. Like they have not shown it as a contingent liability. They are not certain that amount.
Okay, what is the definition of a Maharatna PSU?
Yeah, so Maharatna PSU is a PSU where your profits are up to 5,000 crores. Then your net worth is up to 15,000 crores. And your turnover in three preceding previous financial years should be up to 25,000 crores.
And who are the joint ventures of ONGC?
Okay, so there are many joint ventures of ONGC basically, but I know right now five. So there is ONGC Tripura, which is a joint venture between Tripura government, ILFS, and ONGC. Then there is OPAL, which is ONGC Petroleum Additions Limited, which is between Gas Authority Limited of India, GAIL, and GSPC, Gujarat State Pharmacy, and ONGC. Then there is Dahej SEZ unit, which is a joint venture between ONGC and Gujarat Industrial Development Corporation, GIDC. Then there is a one more I would like to add. There is a joint venture between ONGC and TERI, which is the Research Institute of India, the Energy Resource Institute of India, which is set up in Delhi. Yeah. How much I mentioned? I mentioned four or five.
I think you mentioned one. What is the 2040 strategy of ONGC?
Okay, so ONGC has divided their strategy into five, like six components: for natural, human, manufacturing, intellectual, and social and cultural, social and relationships. So, would you like to go into depth in each
Yes, little bit.
component?
Yeah.
Yeah. Yeah. Okay. So, for energy, what is their objective till 2040 is to enter into renewable sources of energy in energy component. So, what ONGC has done so far to achieve that? ONGC has installed LED lights in their plants as well as their colony. Because of that, around 340 metric unit of energy has been saved. Also, ONGC has installed wind. wind plants and solar energy plants, both producing energy of wind plants are producing energy around 150 metric units, and solar energy plants are producing around 30 metric units. Because of this, overall 264 metric units of energy has been saved. Also, ONGC has been reusing its wastewater. It has so far and so forth, it has used 39.6% of its wastewater, and it has renewed it. Then ONGC has also reduced its greenhouse gas emission by 3%. So this is in uh, natural. So there is human as well. So for the human part, ONGC has reduced its attrition rate by 1%. Then ONGC has also implemented an LMS system which has hours around 6,10,000, and it has been set up under Mission Karma Yogi scheme, which has been initiated by our President, Prime Minister Narendra Modi. Then ONGC has also introduced Harvard Mentor Mentee program, that is for E2 level to E10 level of officers. Then ONGC has also received National Peacock Training Award in the year 2021. ONGC has also received Best Employer of the Year award in the Asia Pacific region. Dr. Alka Mittal, who was the then HR director in 2021, she has also received a Silver CV award. Then ONGC is among the top 25 employers in LinkedIn. As per LinkedIn, top 25 employers in India where you can have a good prospect of having a good career growth. So this is in basically in human. So then in manufacturing, what ONGC's objective in manufacturing is to get strengthened in the upstream market, and to also diversify its portfolio in the downstream market. Can I drink some water?
Sure, sure.
Yeah.
Okay,
So
there's a concept called operating lease. Okay, I wanted to know
yeah,
like what are the journal entries which will be passed in the books of the lesser in the case of operating lease,
lesser, that means the owner, right? Lesser
right?
and lessee, so owner. So what would be the entry passed, like bank account debit to rent account, or lease operating lease? That would just be the entry, plain vanilla entry. Yeah, but they could also the difference between the old Ind AS and the new Ind AS is that you could also consider that lease as an ROU asset. You could also apply the concept of ROU asset.
Okay, why the this India's 116 was introduced? How it is different from the old
Mm,
AS?
that is what I said, right? Operating lease concept was not applicable for, sorry, ROU asset concept was not applicable for operating lease. Then also in this Ind AS, compared to the previous Ind AS, let's say ICI says that depends upon materiality whether you want to classify some item as lease or not. So if let's say it is a very minimal amount and you are paying that on lease, you are taking that. Let's say you are taking a mobile on lease which is for 1 lakh or 25,000. So you can expense out that straight away without considering it as a lease. So these 2 points are there. Then yeah, that much I know. Those are the main two differences between operating lease and financial lease.
Okay, I wanted to know like in the case of 110, what do you know about India's
Okay.
110?
Okay. So basically, what is this 110? It's like you are consolidating two balance sheets, right? So what is the main issue is that you must not post two double entries because of that. Since you are consolidating two things, there would be a duplication of entries, and that is how your balance would not match. So this is the main focus on while doing your consolidation. Okay, so whenever you do your consolidation, prior to that, you acquire some entity, right? You do business combination. So during business combination, you take over the assets at market value, not at book value, right? And when you are consolidating, you're consolidating. That time you consolidate the 100% of the balance sheet of your subsidiary. But even if you have, let's say, 52% of the stake, you are consolidating 100% of the balance sheet. So that is where the concept of non-controlling interest came, because the 48% is your non-controlling interest. So you have to calculate that non-controlling interest, and you have to show that non-controlling interest in your consolidated financial statement in the equity head, right? So how you calculate that non-controlling interest? Let's say I have a 52% of share in HPCL, and rest 48 is non-controlling interest. So non-controlling interest you have to calculate on the basis of net assets. So 52% of net assets are mine, and 48% is non-controlling interest. That is, you have to show that. And also the concept of goodwill also comes. Prior to consolidation, goodwill also comes, right? So I would like to tell you about that, how goodwill is formed. Basically, what we do, we give some purchase consideration to our subsidiary whom we are acquiring. Let's say I have given 1,000 rupees of purchase consideration to HPCL. Then there is also a non-controlling interest. That also I have to provide for that. Let's say that is 500 rupees. So total is 1,500. And in return, I am getting net assets of 1,000 rupees. So the loss is my 500 rupees. So that is my goodwill. Or if it is in profit, let's say I'm purchasing that company and I'm acquiring net assets of that subsidiary in 2,000 rupees, then it would be capital reserve, that 500. So this thing is there. Then again, you have to check for unrealized profit on stock. What is the concept of unrealized profit on stock? It is that, let's say I'm consolidating some company. Okay, so I'm combining that company at fair market value, right? I'm combining that at fair market value. So because of that, 1 minute, huh?
Yes.
Yeah, yeah. So because of that, what is happening, that you are uh, recognizing excess profit in your consolidated financial statement, because you are recording at fair value, and the standalone financial statements are going at book value. Let's say the standalone financial statement profit is 50, but because you are evaluating your assets, so the profit has been decreased. So let's say there it has been recorded as 50, and here it has been recorded as 30. So that difference 20, you have to pass a journal entry for that. That entry would be from P&L account, consolidated P&L account, debit to inventory. And also for dividend and pre-acquisition and post-acquisition reserves. What are pre-acquisition reserves? Pre-acquisition reserves are like these are acquired post acquisition of that company. So for a holding company, those are not relevant. So you have to remove those pre-acquisition reserves from your consolidated financial statement. For that also you have to pass an entry, consolidated P&L to goodwill. Again,
Okay.
this entry has to be passed. And then mm, yeah, and in consolidation, all intercompany transactions are not considered. Like suppose debtors, creditors, bill receivable, bills payable. Then also for debentures and preferences, all that that is also not considered in consolidation. So anything
No,
else?
what is the difference between composite supply and mixed supply? In a very
Okay,
short.
so yeah, composite supply is naturally bundled. That means uh, the principal element, you cannot sell the subsidiary element without the principal element. Let's say you are selling a car. So if you are selling a car, then servicing and warranty cannot be sold individually. So this is a example of composite supply. Right? In composite supply, we charge the GST at the principal elements rate. And in mixed supply, it is artificially bundled. Let's say you are selling a packet of cashew nuts and chocolates during Diwali. So that is a perfect example of mixed supply.
Okay,
And
I will
over
be little.
there,
No problem. I'll have another question. Like, what will be the effect on the share price due to buybacks?
what would be the effect? The share price would increase as the number of shareholders would decrease, and also the EPS would also increase.
Okay, what is a rolling budget?
Rolling budget is a kind of a continuous budget we are preparing on a day-to-day basis. Let's say you are preparing a budget for Jan to December, and you have prepared budget for Jan. Then you Jan 21 to December 21. Then simultaneously in the next month you can prepare the budget for Jan 23 as well. This is called a rolling budget.
What is the journal entry for buyback of shares?
Buyback of shares, share capital debit to bank, debit to buyback of shares. Now you are getting the share, you are receiving the shares. So share capital debit to bank because company has to pay during the buyback.
Okay, what are the goods which are out of the purview of GST?
Like alcohol, liquor, and
Okay, what is block
alcohol.
credit under section
Sorry.
17.5?
Acha, so block credits are those credits where you don't receive ITC on the same. For example, let's say you are purchasing a car which is having a limit up to 12, 12 plus 1, 13-seater capacity. So you will not get block credit on that. As well as for but there are certain exceptions to that. Let's say you are like let's say you are Maruti and you are selling cars, so you would get a block credit on that same. Let's say you are providing that same car, you are using same cars for training purposes, then you would get block credit on that same. Let's say you are Ola Uber, then you will get ITC on same, not block credit, ITC input tax credit on the same.
Okay. Do
Then
you know
same
about okay. Do you know about Pradhan Mantri Ujjwal Yojana?
no.
No. Okay. Do you have any questions for us?
Yeah, I would like to I read your the concept of EVIP and DVIP. So I would like to ask you one thing that in DVIP you are adding back the depreciation and the same and you are less deducting the depreciation from PP. Why is that so? And please tell me any room for improvements I have in this interview.
I will the technical part because the meeting will end in 1 minute. It's not possible to explain. The room for improvement also, I will be able to connect with you after this meet, and I will give you. You did well. Okay, for the interview, it's very good. Okay, we'll connect after this meet because it will end in 1 minute only. Good, well tried and
Okay.
well done.
Okay.
Come into the same link.
Okay. Okay.